Hey everyone, Charting Man Dan of the Chart Guys here, checking in on things. We're going to look at Tesla and Apple, two of the major movers today. A couple of sectors that I'm watching to shift from lead bulls into lead bears, and the lead bull in the tech sector continuing to trade extremely well, regardless of the weakness we saw today. Hope you all had a good New Year's break. Welcome to 2023. So the S&P 500 12-hour time frame started this week with a bull break of multiple levels, but we didn't break all of the levels in the equilibrium. It's a high, low, lower, high, higher, low, lower, high, higher, low. So the bull break overnight, one resistance level broke, second resistance level broke, couldn't get over the third, and so we ended up with a rejection. We started the morning, 15 minutes into the trading day, with the bulls seeing exactly what they wanted to see, minus one thing, Apple. Apple was not participating for the bulls. We had Amazon showing relative strength. Apple was not participating, and that was very notable, and it became even more notable throughout the morning as pretty much it, in my opinion, Apple's weakness really shaped the landscape of the morning. And you can see NASDAQ, same thing, as far as not a very meaningful bounce, daily EMA 12, and of course if we confirm a daily bear flag and break the low of last week, that'll be another vote of confidence for the bears. But we started, QQQ started the morning looking just fine. Pre-market, holding on well, little dip on the morning, bull break over the high of pre-market. And at that point in time, it really stood out that Apple was not participating. Apple had a negative headline about potentially less demand of AirPods and things like that, and a new fear low. We cannot have any confidence in a market bottom if our lead tech generals, Microsoft, Amazon, Apple, are hitting fear lows. They have to put in a bottom. And again, if you were just watching this morning trade, Apple shifted everything, and then other names followed along with that weakness. So Apple at this point, we now have a new resistance level, the high of today, 130.90. And again, if we put ourselves in a bear perspective, bears don't have a thing to worry about if 130.90 is resistance. So that's now our short-term guide. We saw an end of the day bounce on the hourly. It's a potential hourly bear flag on Apple. We compare it to the NASDAQ bounce, which was nothing very impressive, but certainly more impressive than Apple. So the relative weakness remains. And so Apple at this point, the next support level we're looking at is down at 121.19. And there was a meme going around on Twitter, which is very fitting with, it's the Grim Reaper going door to door. And on the door, you've got Meta or Netflix, and then Meta, and then Amazon, and now they're on to Apple. And it's very fitting because as soon as Apple broke its fear low of 128.65, it seems like the focus has now shifted for bears to be all over Apple. So we got a lot of space for an Apple weekly lower high next bounce, and the daily downtrend is going to be our short-term guide. Again, I can't have any confidence in the NASDAQ if the Apple is hitting fresh fear lows. We look at Amazon. Amazon is one of the names that did exactly what the bulls wanted to see today. We've been watching these correlation charts. Amazon divided by QQQ was a falling wedge that broke bull. We are seeing Amazon today the strongest it's been relative to the NASDAQ in 2 or 3 weeks. That's notable. That's a notable shift. And again, it's just a drop of relative weakness leveling out and now trying to tilt the scales between supply and demand to have that shift take place. And if Apple had done the same thing, which obviously it didn't, it would have been a very different day, in my opinion. We can see Apple, this is one of the weakest relative days comparative to the NASDAQ that we've seen in a very long time. So Amazon, daily bounces underway, ton of proving to be done. If the bulls are gonna prove to us that this is anything meaningful, we got a little downtrend resistance line we can be watching, but bottom line is we'll have to confirm a daily uptrend. Whenever this bounce tops out, we'll have to then hold the low and break the high for that trend change to take place. But I'm keeping an eye on Amazon because the Amazon divided by QQQ chart made that notable shift today. One day is not enough, but it's enough to get our attention. And so Amazon is showing some relative strength. The name that is showing the relative strength comparative to QQQ is Meta. It's putting on a show. You can see the last 2 weeks of trading. It's just been nothing but strength comparative to the rest of the NASDAQ. It's very hard for me to be bullish Meta and bearish QQQ, but that's where I find myself. I am bullish Meta until Meta's daily chart gives me a reason not to be. And Meta broke to the highest level on this entire bounce. There's a gap to fill at 128.53, which is a short-term target for the bulls. But if you look at the 15-minute time frame, Meta saw the same drop led by Apple, but we then just set 15-minute higher lows the majority of the rest of the day. And for Meta to do that, when QQQ looks like this, very notable difference. So I am bullish Meta as long as the daily uptrend remains intact. And also we have Meta attempting to get over weekly EMA 12 for the first time in a very long time. We had one candle close above it, but essentially one candle in the last year of trading, and now this little weekly bull flag is confirming. So we can say that the Meta bulls are positioned extremely well if the NASDAQ can see any kind of momentum shift. Not holding my breath for that momentum shift, but I know that Meta is positioned really well for it. Meta also has a lot of space for an hourly higher low to be the result of next consolidation, anything above the low of today. So Apple lead bear, Meta lead bull, Amazon trying to go from a lead bear to join Team Bull, and we'll see if it can keep that up. The dollar finally closing, well, not yet, but trying to close over daily EMA 12 for the first time in 2 months. This is a notable bounce getting going. Weekly, you can see we broke the stair-step pattern. We had a lower high every week for 5 weeks. That has broken. We will, like everything else that's going from a downtrend to try an uptrend, we will have to confirm a daily trend change eventually if we're going to believe that this move can have follow through. But it was interesting because when the dollar was initially bullish this morning, it was bullish at 4 a.m., bullish till 6 a.m., and we weren't seeing any negative impact on futures. Futures were up at the highs. Crypto was up near its recent highs. The metals were up near their highs, and they hit higher highs today. So the dollar wasn't really impacting these assets negatively. We'll see if that changes. You know, in hindsight, you look at the broader market today and say, oh, well, we're weak and the dollar's bouncing. But when the dollar was showing all of its strength, there was no weakness anywhere. So that's something I'm continuing to keep an eye on. Essentially, one of the major questions I'm looking for to start 2021 is, does a dollar bounce negatively impact all the assets that I just mentioned? And I'm not convinced just yet because, again, of the timing of things. Tesla, huge win for the bears. So delivery numbers a little bit lower than expectations. The bear flag confirmed. And we can see the relative weakness right out of the gate because we had a small gap down open when a lot of other things were seeing small gap up opens. And then we just completely fell apart. And this was definitely a part of the S&P 500 and the NASDAQ weakness, along with Apple. And the 5-minute EMA 12 was resistance for the first 4 hours of trading or so. Finally got an hourly oversold bounce going after we double bottomed with the extended hours low. And it is important to check on extended hours, especially when there's nothing else nearby. As soon as we broke 108, 108.24 to be exact, the daily bear flag confirms. But we then look at the extended hours low, and 104.22 was defended by the bulls. It's not a convincing hold at this point. For me to call it a convincing double bottom, I need to see bulls confirm an hourly uptrend back in their favor, and then we'll shift our focus back up towards the recent highs. But clinging to that support right now, and the bears are going to do everything they can to try and take that level out tomorrow. Because if 104.22 breaks, we're just looking down at 100 psychological. And again, it's the same thing. Put yourself in the mindset of a swing trading bear. They now have a benchmark level to be going off of, and they can say if 124.48 does not break, the daily downtrend remains strong, and there's absolutely nothing to worry about as a bear. So we're scouting a Tesla hourly lower high to be the result of this bounce. I did a bunch of little scalps on Tesla today. You know, once we had a lot of downside, I wasn't confident looking for a position to hold for a while, but I was scalping these little 5-minute lower highs using the 1-minute time frame and just, you know, grabbing little $1 moves. And also stopping out break even a lot as well. I grab a little position, I sell half, you know, on a 30-40 cent pullback. I put my stop then at break even, and some of the times that worked out for nice little wins that added up, little quarter day maker. And the other times it ended up being break even stopped outs most of the time. So Still liking the volatility in Tesla, but all bear control aside from this one little support test that's attempting to hold. If we're green tomorrow, holding 104.22, we'll say, all right, bulls, we'll give you a chance to hold that double bottom. Prove to us that you can. But again, overall, bears having a very confident day. SMH, gap up open, and a notable pullback. So nothing really changing on SMH at this point. NVDA, also not really an impressive bounce. Gap up open into a notable amount of profit taking. And so, again, just bear confidence. The most important aspect to me, and as I headed into the new year, you could see the fork in the road. I can see what the bulls need to do to take over the short term, and the bears just need to keep doing what they've been doing. And again, it was closed today, but Apple ruined everything for the bulls. So I have to see Apple and Amazon leading. I have to see QQQ leading SPY. QQQ divided by SPY. Started the morning leading, but then started to show that weakness again. If this is a daily bear flag, that's a big win for the bears. Bears always want the NASDAQ to be leading to the downside because that's what's given all these big old gains in 2022. So that's the nice thing about laying out this is what the bulls have to do, and then just knowing the exact opposite is what the bears want to see. So keeping an eye on this potential daily bear flag on QQQ divided by SPY. Healthcare sector. So let's now talk about, again, the major lesson for me in 2022 was watch for lead bulls to turn into laggard bears. And we saw it with Tesla. We saw it with the solar sector. A bunch of things were standing out much stronger than the broader market and then eventually joined in. And so what I am watching for is XLF and XLV, mostly XLV. If it confirms this weekly downtrend and breaks this low of 133.71, that will be, to me, the bears, I should say, the sector joining Team Bear. We got a double top at all-time high. We're trying to keep this consolidation healthy, but if we confirm that weekly downtrend, it will shift things. I started to watch UNH towards the end of last week because I really liked the tightening range. And again, it was just knowing that, okay, we're in a fork in the road. We can see the bulls take over. We can see the bears take over in the short term. If the bears are going to take over, we're going to look for the healthcare sector to roll over. We're going to look for the energy sector to roll over. We'll look at that in just a moment. And those were two sectors that were very red today. So UNH confirmed a weekly downtrend with a little lower high and lower low. Hourly bounce into the end of the day with the rest of the market. We only broke support by less than a percent. So bulls really want to see, I should say bears really want to see an hourly downtrend follow through tomorrow with another lower low. We do have earnings approaching. Keep that in mind. Earnings are next week. But again, you look at a chart like this, and this is the 4-month time frame. This is years and years and years. Any chart that looked like this, there were many of them 12 months ago, they all pulled back very notably. So the question for me is, all right, if we're going to see another wave of fear in the market, if the S&P 500 is going to head down to recent fear lows, how would that happen? And because we're so beat up in Amazon and we're so beat up in the tech sector, in my opinion, it's got to come from the stronger names rolling over into weakness and adding their downward pressure on the broader market. So in the end, bigger picture, UNH's earnings reaction is what's going to determine whether we get a clear bear break or not. This is the monthly time frame. Monthly EMA 12 has been support ever since the CVID bottom. And so are we going to lose it for the first time in 2 years? Earnings are going to determine that, which is a bummer for traders like me who don't like to hold positions through earnings. But I'm watching closely for the healthcare sector and UNH to potentially turn into lead bears. XLF was one of the stronger sectors today, but it is the same thing as well. If XLF fails the recent high and then breaks the low of a couple weeks ago, that will be one of our stronger major sectors rejoining Team Bear. And again, if we're going to see fear in the broader market, S&P 500, it's got to be all three of these major sectors, XLF, XLV, QQQ. They've all got to be dropping together. And the main reason that we haven't dropped back down into notable fear the last couple of months is because XLF and XLV have held on so well. And we know the NASDAQ is way closer to the fear lows than both XLF and XLV. So as we know, when we're day trading, the only way we get significant fear is when all those sectors are hitting the low of the day at the same time. Do we see all of those sectors confirming daily downtrends and following through for the bears at the same time? Again, that's what's needed for fear to regrip the market. There's fear in little pockets. There's Tesla fear. There's Apple fear. But S&P 500 fear, we don't have it right now. We got some weakness the last 3 weeks. But again, if we're going to drop down 10% to get to our fear low, 9%, these sectors have to roll over. IWM, chopping around, not a whole lot of clarity there. I like the clarity on the weekly time frame, just viewing it as an equilibrium. Can the bulls form a weekly high or low? I actually like the 2-week time frame along with SPY. Can we form the 2-week high or low here, holding the double bottom at the fear lows? And again, whenever I say fear low, I mean the lowest level we've seen on the year of pullback. So can we form a 2-week high or low and continue tightening up? Or do bears keep short-term daily control and break the low of last week? The biotech sector, key resistance is now nice and clear. We had 84.18 and the bears defended it this morning. Look at the 1-minute time frame and the start of the day. So 84.16 is resistance. We hit 84.08 right before the open. We hit 84.09. Actually, 84.08 was right after the open. 84.09, 83.99. So this is a rejection, a low, a double top, a double bottom, a failure to break resistance, a break of support, and the bears took over from there. So that is now the most important resistance level on the daily time frame for the biotech sector. And it's going to be up to the bulls to have to confirm a daily uptrend and break that level if we're going to see a change here. Otherwise, it's just same old choppy action. Support break into a rejection, into a support break, into a resistance break, into a pullback. Again, it's been a choppy mess on the daily perspective. There are days in here that are trending days. You got some really good bull, bear trending days. So it's nice and clear intraday many times, but I zoom out and look at, well, the last 3 months, 2 months, is this bullish or bearish? It's neither for me. It's just a sideways choppy mess. Waiting for some clarity there. So the metals still have this possible rising wedge in play. But every time we hit a higher high, the bulls continue to keep their confidence. And today was another example of that, hitting to the highest level we've seen in a couple of months. And at this point, we would have to see a loss of 4-hour EMA 12 to head back to our daily uptrending support line. But metal bulls are keeping confident right now, especially considering the dollar had a big green day and the metals were green as well. And we look at silver, same deal. And I do have some very small starter bear positions in the metals looking for this rising wedge. And my hard stop is now the high of today. If we break the highs of today, I will be out those swing attempts. And if we follow through for the bears, I will add to those swing attempts. But for now, bulls hanging on. Oil, daily higher high, straight into a notable red day. Daily support of 76.79 broke. So that is our weekly lower high shaping up here. And so now we're looking at really the only way the bulls are going to gain control from here. Let's go to the 2-day time frame. Again, there's so many inverse head and shoulders possible scenarios in the market right now, but the burden is on bulls because they're bullish reversal patterns, and we've got to confirm the higher low for the right shoulder and then the neckline resistance break to confirm that uptrend. So with the weakness in oil, the energy sector saw a lot of weakness. Big red day. Weekly lower high is set. Again, same thing. When I say relative bull, the energy sector has clearly been one of the strongest sectors in the market in 2022. And if we confirm this weekly downtrend, that will be the start of a longer term shift away from that. We've already got monthly consolidation underway. Same thing. Monthly EMA 12 has been holding for 8+ months. No, more than that, a year and a half. So 20+ months. Same thing as the financial sector. Same thing as UNH, and some healthcare names. Do we stay strong in the longer term uptrend, or do our stronger sectors roll over into weakness as the S&P 500 heads back to fear lows and potentially breaks them? So if I'm a bear, I'm liking what Apple's doing. I'm liking that QQQ is relatively weaker, but I really want to see healthcare and the financial sector. But if I have to choose one, I would choose healthcare just because it's been stronger. Have to see it weaken a good bit from here. Natural gas, all bears. A little bit of an oversold bounce here. Trying to take shape. We're just going to zoom out and look for a 4-hour lower high. EMA 12 resistance has been the guide for the last week. RSI doesn't matter for natural gas very often. And we're in a downtrend on every single time frame. So we have natural gas now at the lowest levels that we've seen in 11 months. Next key support, there's a little bit of support in the zone, 396, 381. But again, we're not going anywhere if 4-hour EMA 12 is resistance. Definitely due for a 4-hour oversold bounce the next time it happens. It's not going to surprise us, but it's a lot of work for bulls to try and shift this momentum after this complete bear control over the last few weeks. So I hope you started the year well. And again, I'm pretty much keeping the same mindset as 2022, where on this drop today, I'm not interested in looking for a bounce. I know we're going to bounce. We're going to bounce and look for hourly lower highs, but I'd rather scout the 15-minute lower highs or the hourly lower highs as the result of those bounces. Placed my first futures trade ever today, but misclicked for I'm learning the platform. Meant to place a stop loss, market sold it right away. $3.75 profit. So learning the platform, I'll make a video this weekend about my approach to my start of futures trading. But again, very small, very slow while I get used to a new platform and get used to the little ins and outs of placing orders and things. So overall, a win for the bears. If we're going to see bulls turn this around, Apple's got to put in a bottom and shift to relative strength. Amazon's doing its part, Meta's doing its part for the bulls, but it's going to take more than a couple individual names. It's got to be sector-wide. Feel free to ask any questions. I appreciate you watching, and I hope you have a great Tuesday. Time, Chapter 8. So we are looking now, Colorado, Black Canyon of the Gunnison National Park in Colorado, and it's pretty much like, I won't say it's like the Grand Canyon because it's way different, but it is, I think it's the deepest ravine, I don't know what the right word is, but the deepest thing in the country in terms of steep, how steep it is, and the slope and how fast it drops down to the bottom. And you can see the river in there cutting away, and that's just been millions and millions and millions of years of ice and glaciers and rivers cutting away at these rocks. And it's really cool that you can literally just see time and see all the different years and millions of years going down to the bottom. And it's a pretty cool national park. Not a ton of camping in terms of, being out in the woods or things like that. They have designated areas, but a cool place to check out. And really cool sunrises and sunsets. There's all your nice flowers with the reds and purples and blues, and arid in the Colorado dry air, but still a lot of plant life thrives. But really nice views, long distance. The sunrise and the sunsets were really cool because the shadows across the rocks were awesome. And I would just do my thing in the BLM land or National Forest land. This is just another campsite off the side of the road. And if you're looking to travel, the national parks are the kind of places that cost more, but it's clearly they're a lot better funded in terms of infrastructure and also information. They have great information centers, and you can show up to a national park with no plan, and they'll fill you in with everything you need, maps and best places to hike and best places to camp and all that. If you're going to a national forest, they have information centers, but you can tell they're way underfunded. They don't care. I've gone to national forest information centers, and they almost don't want you to go to certain places. They're trying to steer you away. Maybe it means more work for them picking up trash, which I could understand, but it's way less helpful. It's night and day experiences. So if you're going to national parks, or national forests or BLM land, you need to do research on your own on the internet before getting out there. Otherwise, you are probably going to get lost and you're going to miss out on a lot of the best areas. But that's what I was talking about with the shadows for, looks like sunset starting there in the cavern. This dude, I was just sitting there at my campsite. This little chipmunk, it's pretty poor quality, but his mouth is completely stuffed, his cheeks are completely stuffed, and his belly is completely stuffed. He was literally dragging his belly, walking across the road in an army crawl like he was full of food, which he was. But he just stopped, and he stayed in this exact position, and he just stared at me for literally enough time for me to sit there and be like, what are you doing? And pull out my phone and take a picture for it. It must have been there for 5 minutes, still like that, with his legs sticking out, just completely stopped. He was probably saying like, man, I hope he doesn't come and get me because I can't move if he wants to get me. Anyways, there's some more of the canyon and you can go down into the canyon, but it's a multiple day excursion. And it's certainly a lot of planning, and I did not do that. There's some more of the shadows and different angles that the rocks are being hit. Then I went to Silverton, Colorado, which is a little old mining town, very small, but they go all out for their fireworks, and it's probably the second best firework display I've ever seen. I went to Boston in 2000, and they went all out, so that's probably the best, but it's just regular old Silverton, Colorado. They've got mining tracks, or I should say railroad, nice scenic railroad through the mountains, through Silverton, but some mining history in the town, and mostly a vacation, not a vacation spot, but a place that people pass through, not a whole bunch of locals, but a really cool fireworks show, and nice to be able to just skip into town and see that. So from here, I'm going to hop on over to Uray, and then I think I head down south towards Durango and Mesa Verde National Park, and that'll be chapter 9, I think. I've lost count of chapters, but we'll keep on going. See you soon.